Hello traders and welcome to my how-to guide for trading on Bitmex. This has been requested more often than probably, this is top 3 most requested videos of all time for sure that I haven't done yet. Now, I currently cannot trade on Bitmex. As you can see, I am not logged in because I am a resident of the good old USA. But what I can do is talk about how you, if you're non-US, can trade on Bitmex. So what I want to go over today is risk management and liquidations, because that is by far the most important part of trying to trade, is to not, lose everything is the most important part. Then we're going to talk about how Bitmex works with trade size and for stop loss placement and for take profits and fees. And then we're going to be talking about just the user interface so that you guys can know what you're looking at when you go to Bitmex. I'm going to try to do this under 10 minutes. Additionally, I am currently selling my guide to order flow, order depth, and the order book. And if you're interested in learning more, you can click the link in the description below. All right, Bitmex, known for a lot of things. One that it's known for is its excessive high leverage. Bitmex will offer you up to 100 times leverage. What that means is if I put $1,000 on a trade, I can leverage that up to $100,000. Meaning that if price goes up 1%, I make $1,000. But if price goes down at all, I get liquidated. Here's how the liquidation system works. Let's say that we trade $100,000, right? And we trade $100,000 here at 100 times leverage. What does that make our margin? That means that our margin is $1,000, also known as 1,000 contracts, because each contract on Bitmex is worth $1 for XBT USD perpetual swap. The perpetual swap is a different kind of futures where this will never expire, whereas other futures like this, they actually tell you the expiration date. This is going to expire on September 27th, and this is the amount of leverage that you can use on that contract. When you go to these will all expire as well. Ethereum, there's a perpetual swap on Ethereum as well, but these are contracts that will expire in some time. However, because the perpetual swap is never going to expire, there's something called funding that you have to pay every 8 hours or receive every 8 hours. And if you want to learn more about funding, I have a ton of videos on how to take advantage of funding, what is funding, and all the fun stuff. But let's go back to risk management and not getting liquidated. Here's the bad news. If you took an 100x trade, let's even do it at the current market price. Let's say you do an $100,000 market buy at 10,550, right? Right here. You'd be liquidated if price goes down to 10,513. That's not a lot of price movement. That's just price going from here to here. And the percent, if I was to show that, is what? I mean, it's going to be about 0.45%. It does not take a lot for price to go down or up 0.45%. So using 100x leverage is something that I would highly not recommend. It's really high risk and high reward. But really the risk outweighs the reward, because here's what can happen when you use isolated margin. Let's go back to an easier value here, 1,000. And you can see where you get liquidated. If you entered at 1,000, you'd be liquidated at 996.5. If price goes down 0.35%, you will lose the $1,000 that you put on this trade, your initial margin. How much would it take for price to go up for you to make the same amount that you would have lost? 1%. Yeah. So if price goes up 1%, you make, you would make that margin. You would make $1,000. So if you put in $1,000, you buy, price goes up 1%, you make another $1,000. But if price goes down only 0.35%, you lose that $1,000. So the risk reward here is not good for when you use 100x leverage. It's something that should be avoided at all costs. If I was to give a cap for leverage, if I was to, advise a team or say, never go over this, there's no reason you should be taking over 10 times leverage with this amount of market volatility. Zero reason. I mean, 10 times leverage can be a bit excessive at times, but this is going to keep you much more protected if you use this kind of leverage. This is known as isolated margin, where the risk that you take is limited to the amount you put in. So if you trade with $1,000, and you use 10x leverage, you will have a position size of $10,000. What this means is that the absolute most you can lose is only $1,000. You will not lose $10,000. Now, that changes with something known as cross leverage. Cross leverage, guys, is much higher risk, but it's less likely that you get liquidated. Isolated margin, you know how much you can lose, you know how much you're putting at stake. With this, I can only lose $1,000. With cross, what happens is you can lose your entire account. So let's say that I have 0.03 Bitcoin in my Bitmex account, and price is at $1,000, or let's just do 0.05 Bitcoin. Okay, the calculator is not really doing what it's supposed to be doing right now. Oh, there we go, perfect. Okay, now it is quantity of 1,000 with the entry price of 1,000. My wallet has 0.05 Bitcoin. You can see I'd be liquidated if price went down to 960, which is a 4% down move. Of course, the more I have in my wallet, the less likely I get liquidated. As you can see, my liquidation price goes down. But here's what happens, guys. When you get liquidated on cross, you will lose your entire account. Yeah. That's what happens when you get liquidated using cross leverage. So with cross leverage, you're going to have a better liquidation price, but the risk is very high because you lose it all. So that's just a little tidbit on liquidations and on what you can use. You're going to see something over here that says, do you want to use isolated margin or on cross margin? There's no right answer. A lot of traders do like to use cross leverage so that they don't actually have to type in the amount of leverage that they use. But do understand, if you click cross leverage and market volatility goes crazy, you can get liquidated and lose your entire account. So not fun. What I want to talk about now is how contract size works. On Bitmex, you can only deposit Bitcoin, but you can only trade in denominations of US dollar, or in contracts which are equal to $1 US. So when you type in the order thing, order entry here, it's going to say USD, and you're going to type in how large of a size you want to take. If you want to take a $10,000 trade, you type in 10,000. Hey, if you want to take a $100,000 trade, you take in 100,000. But just remember just how much you have in your wallet. If you're using cross leverage, you don't want to be accidentally getting into a 100x leverage trade and then having to deal with losing everything. So that is really how it works. I mean, leverage or isolated leverage or cross leverage, it's whatever you really want to do. And we can also do with the calculator, and what I'm using here, the calculator, you can just get that from going there. You can just see some examples here of how much you'd make or how much you would lose. If I bought at 10,000 with 10,000 contracts and price goes up to 10,100, then you can see just how much Bitcoin you'd make. You'd make that much Bitcoin. And your margin, let's say I'm using 10x leverage, your margin would be 0.1015. This is the amount that you can lose if you were to be liquidated. And you can see your return on investment, return on equity as well. And yeah. So that's really how it works for entering a trade. Now, one thing that I do have to say is always place a stop loss. Now, if you want to place a stop loss on Bitmex, and let's say you just entered a trade, you're going to go over here. There's going to be a tab that says stop. You click stop. And then after you click stop, you can enter in the stop price, the stop loss price that you want to take. Now, it's important that when you enter in the size for the stop order, it's the exact same size of your current position. Because if it's a different size, it's not going to do its job. But if it's the same size, it's going to close out your entire position. Now, placing stops, that's not something I want to cover in today's video. That is something that you're going to have to learn on your own, or watch one of my videos to learn how to place stop losses. But it's really important that you always place a stop loss. And if at nothing, at least place a stop loss a little bit in front of your liquidation price, so that if price does really go in a certain direction, you get stopped out before you get liquidated. Because if you get stopped out, you're not going to be losing nearly as much as if you get liquidated by the Bitmex system. Now, one other thing I do want to talk about is fees, and then we're going to go into the user interface, and then I'm going to definitely, this video is going to be over 10 minutes, but fees and user interface is very important. So fees, limit orders, you get a 0.025% rebate. What that means is if I take a position size of $10,000, 10,000 contracts, I will receive back 25 or $0.25 if I use a limit order, because you receive a rebate. You receive money back when you use a limit order. It's how that works. If I use a market order, I'm paying 0.075%, meaning that if I was to market buy with a position of 10,000, I would be paying 0.75 US dollars. Now, where this becomes pretty important is, let's say that $10,000 trade I'm taking was 100x, and my initial margin was $100. Well, then if I use a market order to exit and a market order to enter and a market order to exit, I'm paying $1.50 with my initial margin of $100. So that's a pretty hefty fee. Something you do have to worry about. Another reason just not to go high leverage. It's just definitely not worth it. So those are how the fees work. You're incentivized to use a limit order and de-incentivized to use a market order. However, I would recommend when you use a stop, you have the option with stops to use a stop limit, meaning you can try to close your position using a limit order in a certain way. I would recommend just using a stop market order because those will just exit you immediately. Higher fees, worse prices, but you exit out of your trade and you reevaluate and you move on. So we've talked about that. Now I want to talk about funding, and then I'm going to talk about the user interface here. Funding is something that will occur on the perpetual swaps. There's an Ethereum perpetual swap, and there is a Bitcoin perpetual swap. A perpetual swap will never expire. It's a futures contract that doesn't expire, but it is subject to funding every 8 hours. Now, when the funding rate is positive, that means that the shorts will be paying the longs. And if negative, shorts pay the longs. If positive, longs pay the shorts. Boom, there you go. So this is positive, meaning that longs are going to pay 0.1455% if they're holding long positions in 6 hours, and shorts will receive 0.1455% on their trade size in 6 hours if they're still short. That's something you do have to be careful of as well, because you can be liquidated by funding if you're using high leverage. It is possible to be liquidated that way. There are also futures contracts. Now, these will not have funding, as you can see. I can go to Cardano, I can go to LTC. These expire and will not charge you anything, or you won't receive anything in funding. And if you want to learn a little bit more about funding, and if funding doesn't really make sense, you can look at my other videos that I made on funding. Okay, we've gone over liquidations. You can only deposit Bitcoin, but you trade in denominations of USD for your trade size. Now let's go into the user interface. This is the order book. It's showing me how many people want to sell, limit sells, and how many people want to buy, limit buys. This is just chart. You could put indicators on this. I could put on RSI, if I wanted to. I could put an RSI, or I could put any other kind of indicator that I want. I can change this time frame to whatever. And when you take trades, it's going to pop up on here. So it's going to show you, hey, this is where you entered. Hey, this is where you put your stop loss. Hey, this is where you put your take profit. Over here, you have recent trades. Green is market buys. Red is market sells. A market buy occurs when someone buys the best offer or the lowest offer in the order book. A market sell occurs when someone market sells or sells on the best bid in the order book. As you can see here, selling there. And we're in a period of high volatility that probably just did liquidate some people. So that's really what we're looking at here. You can also add in other things here. I didn't want to show them first, but you can show a depth chart. Depth chart is down here. This is showing a visual of how many limit buys there are versus how many limit sells there are, which can be a good gauge for supply and demand of the market. And this is showing you your position size, closed positions, active orders, and fills and order history and all that fun stuff. If I go to a coin like, ES, the user interface is going to be the same, and the information that you receive is the same. How many people want to sell or limit sell orders, limit buy orders, and market history and the price. However, what you see here is this is the currently traded price. This is known as the index price. So this is a average of multiple EOS of different exchanges. And as you can see, they're basically mirrored, but the futures rate right now is higher than the index rate. And we can see that kind of same pattern here as well. Futures rate trades higher than the index rate. Another thing that you always need to pay attention to, guys, is when you're not trading Bitcoin, but when you're trading other coins, always look at contract value. Contract value here is 1 ADA. So if I was to enter my position size, I'm not entering my position size in USD. I'm entering my position size in how many ADA I want to trade. Now, a quick little thing you can do, I don't know if it's going to let me do this, is you can type in the amount of volume you want to trade. So I'm going to do 100,000 times ADA. Is it going to let me? Okay, it's not going to let me. I'll go to trading view for it. What you can do, and a little thing that some traders do like to do, is let's say, hey, I want to trade ADA U19, but I don't really know how big of a trade I'm taking if I trade 100,000 ADA. What you can do is I go to ADA U19, but enter in your position size before it. So you can do, if I want to trade 100,000 ADA, how much is that? Well, 100,000 ADA is 0.8 Bitcoin. And if you say, hey, cool, 0.8 Bitcoin trade, good, then you can take the trade. Or if you, were like, oh, that's too much, then you could type in, let's do, what's 50,000 ADA? 50,000 ADA is 0.4 Bitcoin. So that's a little thing you can do that I love to do with TradingView. I do not know where the price chart went. It just vanished on me. Oh, he's back. That's a little thing you can do that I would highly recommend for trading on Bitmex and trading on futures, is to not just, type in an amount of TRX, type in an amount of LTC. For sure, do it this way where you're saying, okay, so I'm trading TRX U19, sweet, and I'm trading that much. I'm trading 1 million TRX. That's 3 Bitcoin. A little too much risk for me. Let me tone down the risk. So that's something you can use just to make sure that you're not taking too much risk or taking too little risk as well. So that's going to do it for my guide to how to trade on Bitmex. I hope this was helpful. And if it wasn't, you can post any comments that you want in the description. Not in the description below. In the comments below, any comments you have on the Bitmex platform. Or if you want to learn more specifics, you can message me on Discord in my professional trading Discord, or just private message me if you have any questions about, hey, how does this work? Bitmex is a high risk, high reward platform, and you got to be careful to not risk everything with this. It's tempting, but do keep your risk in check. And if you can't keep your risk in check, then futures trading is not for you. Definitely avoid this platform if you do not have good risk management, because it will liquidate you like that. I think trading altcoins can be great. Some people just like to trade perpetual Bitcoin and perpetual Ethereum. That's the contract value for one Ethereum. It's 0.0002 XBT. But just pay attention on this platform just to make sure you're not using too much risk. Pay attention to contract value, and always try to calculate really how large of a position you're taking by doing it this way. With that, happy trading, and I'll see you guys soon.